Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. If you have questions, especially for those of you in YouTube, if you have questions after the webinar, the best way to get in touch with me is through Discord. My name in Discord is Doug P. There's an Options-Doug chat channel in Bookmap Discord. That's a great place to post your questions about my webinar, about the content, as well as post your content of the webinar, as well as post your own content, your own setups using order flow, hedging flow, and market maker hedging activity and options trades as a basis for your trades. So, and also Bookmap Discord is free and open to all, whether you have a Bookmap subscription or not. So again, the best way to get in touch with me is through Discord, Doug P. Also the Options-Doug chat channel in Bookmap Discord. And then finally, I'm on X, formerly known as Twitter as well. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups, for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. And setups can be taken with futures, shares of stock, or options. For example, S&P 500 setup can be taken with ES futures, with SPY shares, SPY options, or SPX options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post. And hello, Gray, welcome, glad you're here. Yeah, it should be an interesting week. Starting on Wednesday, we'll talk about that in just a moment. All right, my agenda for today, I want to cover news items, economic data, events, and earnings for this week. Then I'll go through my positional analysis. Then I'll review a few setups from this morning, and then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. All right, let's start with news items. So I'm just checking the earnings calendar. So it looks like Oracle reports earnings after the close today. The expected move is 4.5%. And then Adobe reports on the 14th, on Thursday. Also after the close, the expected move is 5%. So that's earnings for the week. Now let's go over economic data. It really starts on Wednesday with CPI data. And that's at 8:30 a.m. Eastern Time. It should be a market mover. And then on Thursday, PPI data comes out, as well as retail sales, again at 8:30 a.m. Eastern Time. And then Friday is the big options expiration. Let's just take a look at something here. Go back to SPX. This chart is showing SPX expiration concentration. And note, this is for the expiration this Friday. That is the September expiration. That is the quarterly expiration, and typically a very large expiration for SPX. The quarterly expirations, March, June, September, December. And note, this is fairly evenly distributed between calls and puts. Slightly call dominated, so slightly more call delta. That's shown with the orange bar above the zero line, and the put delta is shown with the blue bar below the zero line. That's market makers delta notional, slightly call dominated. So that's SPX. Let's take a quick look at SPY. And here's the 15th, the September expiration, much more call dominated for SPY. And the same for QQQ, even more call dominated. And we'll keep an eye on this as expiration approaches this Friday. We'll take a look at this every couple of days to check on this expiration concentration. So what this means is in a call dominated environment, we're looking for more mean reverting price action, and as those calls expire on Friday, that should open up, that should free up some of the this delta, and maybe potentially lead to larger moves, and also possibly a call gamma unwind as those calls lose value as they expire. Market makers may be able to sell some of their hedges. All right, so we'll keep an eye on this as expiration approaches. So that is the Friday expiration. And just one other note, the next week is the FOMC meeting on Wednesday. So I'll talk more about that next week. All right, let's take a look at some charts now. We'll start with positional analysis. This is the ES futures in Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. This is SPX. This is a 30-day, 1-hour chart, just showing price and key levels. So first of all, let's focus on price. This was the options expiration in August 18th, and this was a very negative gamma, slightly put dominated expiration, and that as those puts expired, market makers could buy back short hedges, and that led to a put Vanna rally after the expiration on Friday, August 18th, until finally gamma notional shifted to positive on the 30th, and then on the 31st shifted back to negative gamma. All right, so SPX still in a negative gamma situation, but leading up to a call-dominated expiration this Friday. All right, so this is price action for SPX. Really, the uptrend still continues after the August options expiration. Let's take a look at some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. That's for the week. That doesn't change during the week. Then the dashed blue lines are showing the lower and upper daily expected move. And note that SPX is trading above the upper daily expected move. The dashed red lines are showing Spotgamma proprietary levels. These are available to Spotgamma subscribers. Let me point out the key daily levels. First of all, there's the put wall at 4,400. That strike did move up from 4,300 on Friday to 4,400 today. The next level up is the call wall, the volatility trigger at 4,470. That is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now, this is indicating that market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And actually, I missed the absolute gamma strike. That's at 4,450, so that's below the volatility trigger. That is the strike with the largest absolute negative and positive gamma. And then finally, the call wall is at 4,550. And that level did shift down lower from 4,600 on Friday to 4,550 today. So the call wall shifted lower, the put wall shifted higher. The ceiling and the floor are kind of closing in on each other. So the shifts from 4,300 to 4,600 today. Now the floor is at 4,400 and the potential ceiling at 4,550. And also the volatility trigger did shift lower from 44.95 down to 44.70. All right, so those are levels, the key daily levels for SPX. Let's just take a look at a one-day chart for SPX just to see the levels in play for today. Here's the volatility trigger acting as support, and SPX now trading above the upper daily expected move. Let's take a look at Bookmap. In Bookmap, I have my own cloud notes. And note also I'm looking at the December contract now, the Z contract. So on this chart, in my cloud notes, I have SPY levels, also SPX levels, and there's the upper daily expected move for ES. A little bit different than SPX. And then here's the 4470 level, the SPX 4470 level that did act as support. One important thing to note here is the ES to SPX difference did widen out substantially with the new December contract. So with the September contract on Friday, the ES to SPX difference was 3.5 points, and today the ES to SPX difference using the December contract is about 52 points. So a substantial shift in the price difference between ES and SPX using the December contract. Also, the ES to SPY ratio did increase quite a bit as well. All right, so this is the levels in play for today. The main level in play really is this 4470 volatility trigger level, acting more or less as as support with this what pattern that appears to be a reverse head and shoulders. All right, as far as SPY goes, shifts and levels, just the put wall shifted higher, just like SPX, from 442 to 445, and otherwise the other levels all remain the same. All right, let's take a look at NASDAQ now. This is the NQ futures in Bookmap, and I'm going to take a look at a QQQ chart to see the levels in play for today. So the main thing is this volatility trigger for QQQ, so also acting as support, more or less, just like the SPX volatility trigger. And I'm going to skip over the NDX chart. There are really no NDX gamma levels in play for today. All right, in Bookmap, again, I have my cloud notes. I have QQQ levels. There's the 374 volatility trigger that it did act as support. Actually, let me just check on one thing. I may be wrong about that. Let's go back and check. All right, so there's a little bit of a discrepancy between the Thinkorswim script and what is showing on let's go here. QQQ 374 is the 0 gamma level, and the volatility trigger is at 375. Right, so a little bit of discrepancy. We got that straightened out. So 374 is the 0 gamma level, and 375 is the volatility trigger. 374 0 gamma, 375 volatility trigger. They're both important gamma levels. All right, so QQQ round number levels, gamma levels, definitely in play for NASDAQ today. We'll talk about setups in a few minutes. And LS Radar, I don't know if I'm pronouncing that correctly. Yeah, we can look at Meta. It was not one of the stocks that I planned to take a look at, but we'll take a look at that. All right, shifts in levels for NASDAQ. For NDX, put wall and volatility trigger shifted higher, absolute gamma strike shifted lower, and for QQQ, volatility trigger shifted higher, and the absolute gamma strike also shifted lower. And again, we'll talk about setups in a few minutes. All right, let's take a look at some data here that I use in my positional analysis. Take a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. For SPX and SPY, the numbers are negative, indicating traders are long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. This is at the beginning of the day. It will, if this rally continues, this delta notional will likely decrease, especially with SPX and SPY trading above their volatility triggers. And this number is also negative for QQQ. So again, these numbers will most likely, if this rally continues, will most likely become less negative or even positive tomorrow. All right, let's take a look at the Vanna model for SPX. Go over this quickly. This chart is showing how market makers delta notional on the vertical axis, how that changes with changes in price shown on the horizontal axis. There are two curves on this chart. The light gray curve shows how market makers delta notional changes with changes in price only. And then the purple curve adds implied volatility to the equation. That shows how market makers delta notional changes with changes in price and implied volatility. And that change in delta notional with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. So what this chart is showing is if price decreases, market makers will need to sell futures to hedge their delta exposure. They always want to remain delta neutral. On the other hand, if price increases, they will have to buy back their short futures, and that tends to enhance in volatility. So they're trading with price in either direction in this negative gamma portion of the curve. Let's just check on the price of SPX. Let's go back and check. So SPX low of the day was right around 44.68. So that's right about here. So that's pretty close to the bottom of the curve. So this indicates to me there's really very little Vanna tailwind, meaning that as prices increases, implied volatility drops, and with a put Vanna tailwind, market makers can buy back short hedges. But this is really not indicating much of if any, Vanna tailwind. And the charts are pretty similar for SPY and QQQ, indicating not much of a Vanna tailwind. All right, let's take a look at setups. I'm going to start with the S&P 500. This is the hero chart. Hero is hedging impact real-time options. This is available to Spotgamma subscribers. What this chart is showing is price for SPX in the white line, and options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. A rising line indicates that traders are taking positive delta positions, that they are either selling puts and or buying calls, indicating whatever net for the day for this rising portion of the curve is positive delta. And when traders take positive delta positions, market makers are taking negative delta positions, and they have to hedge their delta exposure by buying futures, ES futures. Let's take a closer look at this chart. I'm going to zoom in. We'll talk about some setups here. So the first was right at the cash open. Here's the cash open at 9:30 a.m. Eastern Time. And traders were taking negative delta positions right from the open. Let's go take a look at the Bookmap. I'm going to zoom in. And after this quick surge right at the open, A lot of aggressive buyers there. That's shown by the green volume dots that show buy minus sell. And that order flow quickly shifted negative as traders started taking, aggressive traders started selling. Again, the volume dot showing buy minus sell. A green dot indicates there are more buyers than sellers, and a magenta dot indicates there are more sellers than buyers. And you can see that with this CVD line there, the dark blue falling, shifts from positive to negative, shifts from dark blue to pink or magenta. And notice also the falling yellow line indicating sell stop orders, helping to fuel the move lower. So we already know that traders were taking negative delta positions from the open. That set up a nice short right down to this 44.70 volatility trigger. And then price made a series of lower highs. Oops. Reversed, made a series of lower highs, and then did a retest a couple of times of the 44.70 level. Zoom in a bit. So let's go, we'll take a look at Hero first and see what options traders were doing. Zoom out a bit and we can see right around 11 a.m. traders started taking positive delta positions, and then that behavior persisted. There's the retest of around the 44.70 level, and then price started to move higher as options traders were taking positive delta positions. Let's go take a look at Bookmap, see there are some additional clues. And note these numbers are pretty light. Not a lot of orders here, but large traders were taking positive delta positions with iceberg orders. That's shown by the blue line here in the subchart. That was gradually increasing. These numbers are small. 32 not significant for the S&P 500. But large traders were taking, were buying with iceberg orders. So options traders really driving price higher in the S&P 500. Again, when traders take positive delta positions, market makers are taking the opposite side and they have to buy futures to hedge their delta exposure. Let's go back and take a look at Hero again. And let's drill down a little bit and see, we can see what traders are doing. First of all, I'm going to separate out puts and calls. This rising orange line zoom in a little bit. The rising orange line shows that traders are buying calls. That's also shown by the positive notional value here. They're also net for the day buying puts. That notional value minus 1.91 billion indicates negative delta. Traders taking negative delta positions, although that activity did level off, started to level off, looks like around 1040, 1045, and then they actually started, that line starts rising slightly, they started selling puts, and then that levels off again. So they go from buying puts to slightly selling puts, and then not doing anything with puts while they continue to buy calls. Let's take a look at one other thing. Let's go back to the total signal and let's get a sense of what these zero DTE traders are doing. So they are, it appears to be in large part in control. Most of the options activity appears to be in zero DTE options that expire today. That's shown by the green line. So this purple line is all trades, all expirations, and then the green line here is isolating next expiry, which for the S&P 500, SPX, ES, SPY would all be options that expire today. So very strong correlation between the zero DTE line and the all expirations line. So zero DTE traders are very active today. So far, having a mean reverting action on price, selling the open, and then as price gets lower, they start buying the dip. So they were selling that move higher before the open, and then they started buying as price moved down. So buying the dips and selling the highs. All right, let's take a look at NASDAQ now. So pretty easy read here, and pretty easy read to see that options traders are having a very strong influence on the S&P 500 today, and somewhat of a mean reverting price action so far. Again, selling the open, that rally before the cash open, taking negative delta positions, and then as price dropped down around that 44.70 level, started taking positive delta positions. Let's take a look at NASDAQ. Pretty similar here, a little bit more choppy, but again, right at the cash open, traders fading that rally, the pre-market rally. So let's go take a look at that first in NASDAQ. And Holy Trinity, hello, happy Monday to you. Hope you have a great day too. Welcome, glad you're here. All right, let's take a look at NASDAQ. Let's zoom in on this. Opening setup here. Very similar pattern to the S&P 500. Kind of a final whoosh up in the morning. Looks like there were some large traders selling that with iceberg orders. That's shown by that. Try that again. Iceberg orders. Then aggressive sellers start to come in. That's shown by the magenta volume dots. And you can see that, just like the S&P 500, aggressive sellers, some shown with cumulative volume delta, also sell stop orders, fuel the move down to the, and I'm looking at the S&P 500. No wonder it looks familiar. Sorry about that. All right, my apologies that we've got the correct instrument now. So a similar move up, reversal lower right around the 376 level, down to the 374 level, zero gamma level. Aggressive sellers, you can see all the magenta dots, volume dots. Also sell stop orders, falling cumulative delta, falling stop line, that's the yellow line. All right, so that was the opening setup, short in NASDAQ as options traders faded that move too, faded the pre-market rally. All right, let's go back and take a look at Hero. And then around 10:30, options traders started taking positive delta positions and price started moving higher. It looks like right now options traders in NASDAQ are fading the move higher, so we'll keep an eye on that. Let's just go back and check price action around 10:30. So NASDAQ makes a series of slightly higher lows. All the lines in the subchart rising. Cumulative volume delta, stop orders, iceberg orders all rising. Then the aggressive buyers really start to come in about 11:15. You can clearly see the shift to green volume dots there. All right, so we know that options traders are right now started to take negative delta positions, and looks like aggressive sellers are coming in. So we'll take a look at this in just a moment. I do want to cover a few setups in stocks. All right, Ollie, I'll get to your question in just a minute when we get to the live market. So it looks like well, we'll talk about that in just a minute. All right, so let's take a look at some stocks. I'm going to go back to Hero. Well, actually first, let's take a look at this watch list in Thinkorswim. I have it ranked by percentage change, highest to lowest. There's Tesla on the top, AMD and NVIDIA on the bottom, and NVIDIA and Tesla the usual suspects. If you're not much movement in the S&P 500 and NASDAQ today, but definitely again the usual suspects, NVIDIA and Tesla moving quite a bit in opposite directions. So let's just go through and we'll take a look at AMD also. So I'm going to go take a look at AMD first. So in AMD, I'm going to separate out puts and calls. And it took a few minutes, but traders right around 9:35 started selling calls pretty aggressively. As price was moving lower, they started selling calls. Let's go take a look at AMD here in Bookmap. So very sharp drop in the first thing in the morning in AMD would have been, unless you were really prepared for that, would have been hard to catch. All right, let's move on to NVIDIA. Another really sharp drop lower. Let's zoom in on this. So here's your opportunity if you were very fast in the morning to take a short. Let's go take a look at Hero. So price quickly moved below VWAP and stayed below VWAP. Take a look at Hero. Go to NVIDIA. So NVIDIA traders were buying puts and selling calls. Price moved through the hedge wall at 455. Also 450, the key gamma strike didn't quite make it to the 440 put wall. Let's take a look at something else to see how we could have prepared for this in NVIDIA. I'm going to go to, this is Equity Hub, Spotgamma Equity Hub. This is the key daily levels, showing a 10-day history of the key daily levels. And if you trade stocks, this is a good thing to look at to see how the levels shift from day to day, just like I do for the S&P 500, SPX, SPY, NDX, and QQQ. You can also look at this information for stocks. So what this is showing is the key gamma strike dropped from 470 to 450. That's from Friday to Monday. The hedge wall also dropped lower. And the put wall dropped lower. So that I interpret that as bearish. 3 levels shifting lower, that is bearish. So based on this, I would be looking for a short setup at the open, and the order flow and hedging flow definitely confirm that. Let's zoom in on this. And from the open, Hero shifting lower. Traders taking negative delta positions. Again, selling calls and buying puts. Both blue and orange line falling. All right, finally, let's take a look at Tesla. And just the opposite. Tesla was upgraded this morning. I think this might be what has sparked this rally. And note the rally is SPX is trading, Tesla is trading above the call wall, 280 call wall. So it took a little while. There was about 15 minutes of chop before traders started, oops, wrong tool, aggressively taking positive delta positions, and price responded higher. There's a flow alert. It may be hard to see, that small yellow dot, indicating unusual activity in the Hero signal, and that would have been a good opportunity to look for a long. Price consolidated a bit as the Hero signal flattened out and then started to move higher as traders resumed taking positive delta positions. All right, so let's go to Bookmap, take a look at Tesla. All right, Truman says, I checked mine at 9-ish, and those numbers had not shifted yet for NVIDIA. Is 9/11 not updated until later in the morning? Those numbers should be available first thing in Monday morning, or first thing in the morning. That those numbers are based on gamma weighted open interest. Open interest is updated sometime in the evening, like around midnight. So I think Spotgamma does their calculations sometime very early in the morning, 2 a.m., 3 a.m., something like that. So those numbers should be available after that. For the weekend, I'm not sure if that's Friday night or Sunday night, but by even 5 or 6 a.m. on Monday morning, the updated levels for today, for 9/11, should be available. So it's potentially you needed to do a refresh on your browser, or maybe even clear cache, clear your history, and refresh your browser if you do not see the current levels for today in Equity Hub. So Truman, try that. Also, you can contact info@spotgamma.com with any questions, concerns about that. But my data was updated when I checked on it this morning. All right, so here's Tesla. A little bit of a chop in the morning for the first 15 minutes or so. Price breaks out as traders start aggressively taking positive delta positions. There's that alert, then a retest of VWAP in the 263 level, and then aggressive buyers start to come in. You can see the size of the volume dots increases, and aggressive buyers as well as options traders take price up to around the 272 level at right at noon, 12 noon. So yeah, Truman, I think your first step would be to do a refresh, clear your cache. If that doesn't work, get in touch with Spotgamma, info@spotgamma.com. All right, so big move today for Tesla. Let's go back and take a look at Hero again. So really after about 9:45, again, there's when traders start aggressively taking positive delta positions, that levels off, consolidation, pull back to VWAP, and then aggressive buyers start to come in, as well as options traders taking positive delta positions, and price moves higher. And notice that options traders have taken their foot off the gas. Price is consolidating. Let's just see what they're doing today. So call buyers definitely driving price action in Tesla today. Again, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. All right, so choppy range-bound action in the S&P 500 and NASDAQ, and then great short setup if you could catch it in NVIDIA and AMD, and then a great long setup in Tesla. Again, the usual suspects. All right, let's take a look at the NASDAQ now. There was a question earlier, Ollie asking about where would I expect a retracement from in NQ. So far, NQ appears to be moving higher, even though options traders are taking negative delta positions shown by the falling purple line, although that does seem to be shifting higher now. Let's go to Bookmap. Go to NASDAQ. All right, IcoJet, I'll get to your question in just a minute. So here, if I was looking for a retracement in NASDAQ, I would watch the QQQ and NQ round number levels. So we saw that the hero signal was starting to turn up again. So I would just watch this so far. So we know that overall, though, the trend of hero started to shift lower around 130. That's right here, right around 130. So that's right around here, 130. We also know right around that time, large traders started selling with iceberg orders. Shown by those icons there. Then aggressive sellers start to come in right below the 377 level now, and it looks like there's still some aggressive buyers here. So if I were looking for a short in NASDAQ, I would wait for a lower high. All right, so IcoJet asked, does the 270 call dominated level in Tesla play a factor as much as the call wall? So let's take a look. Go to Tesla here. And I'm going to go take a look at Tesla and Equity Hub. Let's take a look. All right, let's go back and see. Tesla is trading right around 273, 274. All right, so let's see what information that we can gather from this. So we know that, first of all, we know that Friday is a major expiration, and likely there will be a large percentage of gamma expiring on Friday. These orange bars are showing call gamma notional, and when price increases like it's doing today, we know that all of these calls, so the assumption for stocks is that this is what Spotgamma assumes, that traders are long calls, market makers are short calls, and as price increases, they have to continue to buy stock to hedge their delta exposure. So we know that traders are buying calls today. We also know that all of these calls down, especially from the 250 level and above, they're all going deeper in the money. Their delta is increasing as they go deeper in the money. So as traders are buying calls today, those calls that are shown here in Equity Hub are going further in the money. Their delta is increasing, and market makers have to continue to buy stock to hedge their delta exposure. Now, another thing that we can gather from this chart, as price gets up to this level, note the slope of this orange line indicating a very quick shift in gamma notional the slope starts to level off. So this indicates that market makers are becoming fully hedged, have a reduced need to hedge as price increases, and this should indicate potential at least temporary ceiling for price as this curve starts to flatten out. Again, market makers' need to hedge starts to diminish. So all this gamma is deep in the money, and market makers, again, need to hedge will start to diminish. All right, let me check for questions. All right, so Truman says Hero for Tesla monthly and 5-day range level was giving very negative signals this morning, but Tesla rose. All right, so I'm not quite sure what all that means, but remember, there was news about Tesla this morning that this is something new that is new information that came out this morning with the upgrade this morning to Tesla. So that is, we'll look for these levels to shift tomorrow. But what this is showing based on the current gamma levels, that this market makers need to hedge is starting to diminish. All this call gamma is starting to go deeper in the money. All right, Truman asks for stocks. Spotgamma uses short puts and short call model for stocks. That is correct. So for stocks, Spotgamma assumes that traders are long puts and long calls, so market makers are short puts and short calls. On the other hand, for indexes like the S&P 500 and NASDAQ, Spotgamma assumes that traders are long puts and short calls, so traders are short puts and long calls. Our market makers are, for the index, they are short puts and long calls. All right, so two different models, one for stocks and one for the index products. That's correct. All right, let's go take a look at Tesla and Bookmap. Well, first of all, we'll take a look at Hero. Let's go back to Tesla. So Tesla continues to rise. It looks like some aggressive traders started to come in right around 120. Let's go to Bookmap. So it looks like the next target is the 275 level of high liquidity. Resting sell orders, sell limit orders. Ollie says the Spotgamma stuff is crazy. I'm going to need to read up on this a bit more. Yeah, this is something new. This is a new way of looking at the market, and kind of an options-based way of looking at the market. My thesis, one of my key tenets for trading, is that options trades and market maker hedging activity are a key driver of S&P 500, NASDAQ. This is not every day. This is not every minute, every day, but often. And for certain stocks, especially for NVIDIA and Tesla stocks that are in play, traders are buying and selling calls and puts, and market makers are taking the other side of those trades and hedging by buying and selling stock. So Truman says, and Ollie, there's a lot of information. Take your time. Spotgamma has a great website, a lot of information there. Also a YouTube channel for the basics for Spotgamma. Also, I have a webinar every day, 1:30 p.m. Eastern Time. Archives are available in the Bookmap YouTube channel, and I show traders how to take this information and use it in their everyday trading. How you can, I try and make it practical, how you can utilize this information with Bookmap and Spotgamma to plan and set up trades, plan and execute trades. All right, so I hope that helps, and Ollie, please come back, and this will start to make sense after a while. All right, let's take a quick look at the S&P 500. Consolidating around the upper daily expected move. And SPX also consolidating, but above its upper daily expected move. All right, no, so NASDAQ consolidated around the 377 level. Now attempting to move higher. Let's see if that hero line continued to turn up. And then we'll call it a day. So let's go to NASDAQ. So if we zoom in a bit, we can see it right around 2 p.m. that options traders started taking positive delta positions again. All right, Truman says the round numbers seem to have as much influence as the option levels. Yeah, they do. I think especially for QQQ, for NASDAQ, you just have to watch it every day. But I think that's where traders put their orders. You know, of course, for options, you can only buy and sell options at the round number strikes. So for QQQ options, you can only buy and sell options at the 375, 376, 377 level. So the round number levels are very important. All right, then Ollie, you're welcome. Truman says it goes faster if you have a subscription. He says he didn't and did not learn as fast as I am now. Ollie, also, Spotgamma does provide a free 7-day trial. So I would spend, before you can take full advantage of that, I would spend some time reviewing the Spotgamma website and watching my webinars, you know, and attending live every day. So once you have somewhat of a feel for it, then maybe try that, the trial. All right, my time is up. I want to thank everyone for watching. Thanks for your questions and comments. And remember, fireworks should start later on this week with CPI on Wednesday, PPI and retail sales on Thursday, and then the big September quarterly options expiration on Friday. All right, thanks again. Thanks for watching, everyone, and I will see you tomorrow. Bye.